Hey guys, what's up? It's Chris Gunnels. I'm here for another daily recap for May 26th and the 27th, where I go into detail about closing, opening, and managing my trades. I do want to say that I'm sorry I didn't have time yesterday to go over my trades, and that's because I was busy doing some honeydews. So let's get right into it and start with the opening trades. I want to actually start with IBM, which means I need to change to the Thinkorswim platform. Okay, so this isn't technically a brand new opening trade. This IBM trade was put on a while ago for earnings. Actually, let's see if we can find the actual date on, let's see, buy to open on, so it looks like I opened it on April 21st, and I believe that was for earnings. It was a simple iron condor where I sold 100 put, I bought the 95 put, and then I sold the 125 call, and I purchased the 130 call. And that was, I can't remember what the probabilities were on that. I think it was around 70% or so. Regardless, after earnings, I was tested on the call side. And so what I ended up doing was I rolled up the put side up to 125, 120. It's a $5 wide iron condor, as you can see. This is what the risk graph looks like. As of today, the actual potential loss was worse than $82, as you can see here. So the last few weeks, I've just been letting it go back and forth, back and forth. If we take a look at the chart, maybe it'll show us. So it's been fluctuating from 111 up to 125, somewhere in there, all the last few weeks. Well, today it got a good pop up to 125, which is right at the peak, if you will, of my iron condor. Now it's actually an iron fly since I rolled up the put side to be even with the call side. So let me take you back to my Wingman tracker software. Helps me keep track of all my trades. So back to the roll in the beginning when I was first tested after earnings on the 125 call side. Since I rolled up the put side, I received a credit. I don't remember what it was. I think it was like $1.70 or something like that. If I did the math here, I could figure it out. But regardless, since it went, throughout the last few weeks, was going up and down, and today it finally hit the 125 mark that I've been waiting for. I actually went and closed the entire iron condor, and then I rolled it out, essentially opening a new one out to July with the same strike prices. And being that the two short options here are at 125, it's technically an iron fly, is what the term is. But the total credit is $4.26. And being that it's $5 wide, my max risk was $5, but since I received $4.26, my actual net potential loss is, let's actually do the math. $5 minus 426, that's 74 cents, right? So $74 now in this trade is my max loss. Now the reason there's actually two reasons why I went ahead and rolled up the put side, and then today I rolled it out to July, was because it reduces my risk. That's the number one reason, right? I'm not going to lose as much as I originally had outlaid for potential losses. The second is I can take that capital that I would have lost, but since I gained it back in the credit here, I can take that capital and redeploy it to other profitable trades. And that's exactly what I did today. If we go to the next opening trade, and this is an actual opening trade today, it was in the Qs, which is the NASDAQ. Okay, so this is, let's go to the Analyze tab here. Oh, it looks like I opened it inside of my other platform. Just a second. Oh yeah, here we go. All right, the Qs. And then if we go to the Trade tab, pull this up. Okay, this is this ticker basically tracks the NASDAQ. We can go to the actual activity tab, which shows you what I got filled at, the strikes, and then the time to expiration. This was the June 26th expiration, so 30 days till expiration, and it's a $2 wide iron condor for 61 cents. And I felt like that's a pretty good risk to reward ratio, being that this is an 80% profitable probability of profit trade. Okay, the first closing, let's see, the first closing trade was Baba, so Alibaba. It was an iron condor in which I received $1.85, it looks like. I closed it for $81 or 81 cents. The realized profit, the reason why it's $75 is because of commissions. This platform or the software that I use, it takes into considerations, how much you pay in commission. So let's look at this real quick. This was the June expiration, June 19th expiration. 190, 185 put spread, and then the 230, 235 call spread. That was nice. Good winner there. Let's see, when did I put that on exactly? I put it on May 21st, and then 5 days later on the 26th there, I was able to take this off. Okay, moving on to the next one, which was Caterpillar. Let's see, I sold an iron condor on April 28th. I took it off about a month later for about 50% profit. Again, June expiration. So a lot of these iron condors, they take a little while to profit, but they're high probability, 80-90%. And when you actually manage at 20 days, 21 days till expiration, or at 50%, you actually increase that probability of profit even more. So that's why I like doing that. You rarely, well, I won't say rarely, 10-20% of the time at least, you're tested on one of the sides, on the call side or the put side. But when you are, all you have to do is roll down or roll up, depending on which side you're tested on, to cover some of those losses. And what you can also do is just wait for the stock to actually come back into the profitable zone, which actually happens quite a bit. All right, so the next closing trade is gold, and I closed these yesterday, right, May 26th. So let's see, I sold a vertical call spread for 78 cents. About 50% profit or so. I closed that out, and let's see, I opened it April 28th. I closed it May 26th, about a month to do that, but that was for gold, and I'm happy with that trade there. All right, guys, that's it for me for today. This is, again, the daily recap for May 26th and 27th. Since yesterday I wasn't available to do one for you, I apologize for that again. But if you're listening on the podcast, make sure you head over to my YouTube channel so you can get an actual visual representation of what I'm talking about on each of these episodes. And if you're watching this on YouTube, Please make sure to hit that like button, subscribe, and to share this on your Facebook, on Twitter, on any of your social platforms. That would be very helpful to me. It also encourages me to keep spending my time to create these videos and to hopefully teach you and help you also become profitable in the market. Also, it helps YouTube's algorithm. Basically, it lets them know that what we're doing here is valuable to you and it could potentially be valuable to others. All right, guys, that's it from me today. I appreciate you guys watching and listening. I hope you have a good one. Love you. See you next time. Bye.